All right. Welcome. Good morning. How you guys doing? Let's get this thing started here. Let's come in here and take a look. We got 5 minutes until the bell. And I think, yep, 5 minutes until the bell. And so we're just looking at the futures market here. Let's kick up some of this information so you guys can see a little bit about what's going on. Who am I? Who am I? Let's see. Let's first of all start off with a quick word of wisdom. All right, should we? So I'm going to start off here just giving you a quick little word of wisdom. What's wrong with my... Here we go. So, well, actually, let's skip that until the end of the class. Let's do that a little bit later. Let's get back to the charts. We got 5 minutes till the bell. Let's not start off with the lesson. Let's start off with the charts. So my name is Lan Turner, and I am former instructor of the Chicago Board of Trade, Chicago Mercantile Exchange. Kind of a feather in my cap. I did that when I was first getting started. For about 5 years, I worked out there and taught in classes out there. It was a lot of fun. It was nice and learned a lot more than probably than what I taught. Teaching people how to trade out there using electronic platforms. And that was when we were making the transition out of the pits and onto the electronic platforms. My job was I went out there and did a lot of education on how to trade with the electronic platforms. Got to meet a whole bunch of really nice, wonderful people and sit at the feet of some great traders. And they taught me all of their neat and wonderful secrets. And I was able to teach them how to use trading software and went through that process. That was a lot of fun. Traveled around the whole country with a bunch of great, wonderful educators and traders. And we taught all over the country, New York to Los Angeles and Las Vegas and everywhere in between, Florida, everywhere. So we did a traveling presentation as well. And so I've been in the financial markets ever since then. I was just a young man when that happened. That was 30 years ago. So been trading ever since. So here I am trying to give a little shot of share my information, my knowledge, some things I've learned. These are educational classes that we're going to be teaching here at the on this YouTube channel. And we're now currently broadcasting into 3 channels. We're broadcasting into Commodity Trading School, Track and Trade, which is the software platform we're using, and Trade Mentors. And Trade Mentors is our primary classroom. So if you are in Commodity Trading School and Track and Trade, and that's how you're finding us, we're not going to continue broadcasting into those 2 classrooms starting Monday. Monday will be our Thursday. What's today? Today's Thursday, right? Today will be the last day we're going to broadcast into Commodity Trading School and into Track and Trade. We're going to only from now on be broadcasting into Trade Mentors. So go to the Trade Mentors website, youtube.com/Trade Mentors. Register, sign up there, and that's where you'll find us from now on. We're not going to be over on the Track and Trade and on the Commodity Trading School classrooms. I'm going to just try to consolidate everybody into one place, into one location. I currently teach at Dixie State University. Actually, they changed their name. It's now Utah Tech University. So we're going to start classes down there October 1st, first week of October. I've got live classes. If you want to come to St. George and hang out and go see Zion Park and stay for a week, you can come and hang out with me and we'll do live classes in St. George. So first thing you need to know is that we're trading the futures market. This is not the stock market. Did the market just open? Not yet. What have we got here? So market's going to open here in... What have we got? It's 29 and we're not on the minute chart. These are the daily charts. So this is the daily chart, and we'll come back to the daily chart. As the market opens, let's go over to the 1-minute charts and we'll watch the open. Now, this is not the open of the Chicago exchanges because we're working out of the futures market. So these are the Chicago exchanges and the Chicago indexes for the stock market. That's why we have an open. So it's actually the stock market open, but we're watching it over in Chicago on the futures exchanges. Look at the NASDAQ or the Russell. Look at the Russell fall. Holy cow. Well, the other 3 markets are... This is generally what happens. We call this cousin Russell over here. Some of my students from the university started calling him Cousin Russell because he's always doing a little bit different something than the other three. So we got the S&P up in the upper left-hand corner. That's a 1-minute chart. We got the Dow in the upper right-hand corner. We got the NASDAQ in the lower right-hand corner. And then we got Cousin Russell down here. He's the Russell 2000 down in the left-hand corner. So these are the four indexes that are tracked on the Chicago Board of Trade. And so we, of course, because of Chicago, out in Chicago, we trade 24 hours a day or 23 hours a day. 23 hours a day on these markets. You can trade them all times of the day, but because they open, right, we have the opening bell, 9:30 Eastern, then they have their opening time frame. Even though we've been trading them all night long, it doesn't matter in Chicago, but in New York, they don't start trading them until 9:30 in the morning. So you have your open. And so what I like to do is I like to watch the flash open. So I call it the flash open because it flashes higher, and then it sweeps lower, and it wipes everybody out that went long, and it wipes everybody out that went short. And it just does this crazy stuff. The first 5, 10, 15, sometimes we'll sit there and watch it do crazy stuff for the first 20, 30 minutes. But I like to then bracket that high and low. So whatever it establishes in this first range, whether it's 5, 10, 15 minutes, sometimes we have to wait for a full 30 minutes for it to establish a range. And it'll sit there and wander through this range for some time before it even establishes that it wants to be bullish or bearish. So we'll draw trend lines across the top and establish an area of resistance. We'll draw trend lines across the bottom and establish an area of support. And of course, we can go out and do this on longer term time frames as well, but we'll just stick with the 1-minute chart for right now. We've got multiple charts, a whole bunch of, computer monitors around here, and we can have charts on all of them, different time frames. But here on this YouTube thing, all I can do is project one screen at a time. So we're going to project 4 charts with the 1 minute for now, and I'll go in and show you how we can adjust some of those things. Today, I want to give you a lesson on how to look at different time frames in just 1 minute, and some different markets and different ways that we can, trade using more than just the 1-minute chart. So we'll talk a little bit about that. I've been editing the Pit News magazine this week, getting ready for the October issue, and it's really turning out to be nice. We got some great articles in there. One of the articles is from one of our trade mentors, David Duty. And David Duty has he's actually been trading in these markets almost, I would say, probably longer than me. He's older than dirt. No offense, David. He's older than I am. He's been around longer than I have, but he's been trading for quite a while. And he's written an article on his trading strategy for his day trading strategy, and it's in the Pit News magazine for the October issue. You're really going to want to watch that. You're going to want to, he's got a video, we're going to do audio, and the written word. So just quick to show you, this is Pit News Magazine. Pit News Magazine is a multimedia magazine. You can listen to it, you can read it, and you can watch it. Now, you can't watch all of them. We don't do videos for every article, but we do audio for almost every article, and we do, you can, of course, read all the articles as well. But you can get the entire year of the multimedia trading magazine. If you're into trading and that's what you like to do, you're going to want this magazine. All right. So subscribe. You can get the entire year for $1. Not just one issue. You get the whole year, all 12 issues for $1. You just use my code LANLIVE-$1, and you can get the Pit News magazine, and you're going to get a hold of David Duty's and you get David Duty's article on his day trading strategy, and he's really doing quite well with it and wanted to share it with everybody. So that's going to be in the October issue, and we're going to feature him on the cover of the magazine. So excited about that one. And I'm going to take you over, and we'll take a look at some setups with David's strategy here today, and we'll learn a little bit about what he's been doing. But I want to watch this. You can see we got this, the market's kind of flashing up, flash back down. It's a little dangerous to trade this. Look at Cousin Russell down here in the bottom left, dropping down hard, coming back up, having a hard rally, taking everybody's stops out that got short. And now it's starting to fall once again. We got the NASDAQ, made the 4-bar rally. And we only had one flat bottom bar. I like to have 4 flat bottom bars. Now look at this. The Dow's giving us 4 flat bottom flat top bars, and that is very bearish right there. So we are below the 50 period moving average, we're below the 200 period moving average, and we're below the VWAP. So this is very bearish, and that would be a good sign that there's a possibility we could have a short position in here. So we come in here, draw this trend line right in there. You can see we're bouncing off of that area of support, this lower region down in here. So we'll draw a couple of trend lines in there. We got a trend line up here we're going to draw. So that's our boundaries. So that's our upper boundary and our lower boundary. We'll draw those down here too on the Russell. And on the Russell, we're going to go lower boundary. We're going to go, here's our one lower boundary. Oh, we had a top boundary. We fell back down. We're breaking it to the upside. That's a nice signal right there for a long position on the Nasdaq. So the Nasdaq's showing bullish, while the Dow is showing bearish. That's not good. We don't like to see the divergence between these markets because they generally move like waves. They move together. And so if you got one going down and one going up, that's a lot of pressure against each other, and they then generally correct. So I don't like to, if they're not kind of moving together like dolphins in the waves, then I kind of want to sit aside and watch for a minute. There's no rush to jump in right now. Now I know that the markets are exciting, you want to get in there, you want to trade, you want to make some money, but these opening bells are a little bit dangerous. Look at the Russell. Big topping tails, big bottoming tails, little bodies, another big body, big topping tail, whipping back down all over the place. It doesn't know what it wants to do. So why do you? You don't know what to do. You don't know what to do in a market like that. So just sit aside. That's the best thing to do. Now, the first thing we're looking for is we're looking for an ABC pattern. That's our opportunity that we want to get into. We want to see a market start to trend in one specific direction. Give us a little couple bar pullback. We don't want it to come back so far that it breaks the average true range, and then goes bearish again. But we want to be mindful of the fact that we're below the VWAP, which means the market's bearish on the day so far. We've got the 50 moving average up here. It's bearish on that one. Plus, we've been looking at the longer term charts over on the 2-minute before the morning bell. We've got the bulls and bears on the 2-minute charts. We've also got some other charts that we can look at to help us identify trend direction. But overall, we're going to trade some small trends, and so those are best done on the 1-minute chart. And I like the 2-minute chart. The 2-minute chart for me is my long-term chart. Believe it or not, a lot of people like to use 5 minutes or 15 minutes for their long-term charts. Those are, we're doing a little bit shorter time frames, and a 15-minute chart just is too long. So I like to come down. My long-term chart is a 2-minute chart. So I look at the trend on the 2-minute chart, and then we execute trades on the 1-minute chart. But for the morning bell, I just like to watch the 1-minute chart, and we'll see what that's doing. You can see that we've got some nice breaking. And what we've got going here, just to give you guys who haven't been with us before, up in the upper left-hand corner is the S&P 500 on the futures market. Those are Heiken Ashy bars and the average true range. So the ATR is the average true range, which is the yellow dots. And it just, all those arrows they're not necessarily buy and sell arrows, although you can use them for buy and sell arrows. What it's really doing is it's telling you the market is bullish and bearish. And then we're looking for recurring price patterns. We're looking for ways to decide that it's time to get into a trend one direction or the other. But we need a trend. We need the market to trend first before we want to start getting into it. We don't, and right out of the morning bell, it's hard to establish a trend because the market goes all over the place. So once you get a trend established, you can start trying to take some positions. But you don't want to get into a market that's going one direction and then coming down close to, just as it's starting to approach a strong area of support, or going up just as it's getting into a strong area of resistance, because it might go up and just as soon as you get in, hit that resistance and then flush. So you don't want to take those. And as it's coming down, you don't want to jump into a position just as it's hitting an area of support, because it might bounce and flush back up. So you want to be careful. So like right here, this is the Dow, and you can see we had a nice down signal. Everything looks great and perfect and hunky-dory here for this market to get into a short position on that little pullback right there. See that one little bar? This is called flagging. So the market started to flag right here. So we had lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows, and then we had a flag right there, a little break where it pulled back and it went into a little flag formation, and then it started to break out the bottom. The problem with that entry right there is that it's a little bit dangerous in the sense that this was just a whole bunch of area of support right here, and the market comes down, bounces off support, bounces off support, bounces off support. Now it broke support. So in this case, we probably been okay to get in right there on that little flag. So this little flag right up here might be a little tiny for you guys to be seeing. but that little flag right there, and then it might have been okay to get in, but that's a dangerous spot to be trying to get in when you got a strong area of support right there that might just come down, bounce off of, and rally and take you back out. But it's got nice 4 bars of flat tops, so that's actually very positive, a good signal and a good strong downtrend here so far this morning on the Dow. We haven't taken a position yet. We're still waiting and watching. Not too anxious to jump in this early in the day. So we'll wait for a better position to be established. Now what we're doing is we're coming in. Looks like we want to go bullish once again down here on the Nasdaq, and the Nasdaq's breaking higher. So we got kind of a rally up. We got a little pullback, a flag right here. It's a big flag. Came back strong, that flag, and then we got a rally that failed, made a new high, and then we got another little flag right here, and it's going to try and go long once again. We got this area of resistance across the top, so we're going to just watch this thing. Remember, we're still below the VWAP, so technically speaking, when a market is below the VWAP, it's considered bearish. It's got to get above the VWAP to start taking long positions. That's why a lot of traders will use that VWAP to identify whether they want to be bullish or bearish on the market. The problem with that is the VWAP is very laggy. And so it stays way up there. It doesn't move very fast to come in and intercept the market. And so what happens is you say, well, I'm not going to take any long positions until it's above the VWAP. Well, the market comes down and then it starts making this beautiful trend up and you miss it because you're still waiting for the bullish trend to get above the VWAP. And so that's kind of a misnomer. I don't really teach that you should only take long positions above the VWAP and short positions below the VWAP. I have a strategy where for a longer term position, if we got a real strong bullish market and it gets up above the VWAP and you're looking for the market to have nice strong bullish trend out on the longer term charts, out on the daily chart and such, then you can go ahead and buy above the VWAP when it pulls back, buy the pullbacks and anticipate a continuation of the uptrend. Same with the downtrend, you can do that. But the problem is you get the VWAP acts like a rubber band. And so it continually will pull, it will continually pull the market towards the rubber band. So it's like one of those games you played with a rubber ball you had a paddle and a rubber ball. So the market swings back and forth across the VWAP. And that's if you're kind of in a neutral market, which is what we've been in for the last 2-3 weeks. We've just been kind of in a neutral down market, not a real strong market for the upside, not really been really strong to the downside either. It's just kind of been neutral and bouncing back and forth across that VWAP. And it's been really hard to trade these markets the last couple of weeks. Just surviving is kind of where we've been. We've been in kind of survival mode because the market's not really had any wonderful trends one direction or the other. Kind of swings down and then it swings back and it swings down and it swings back. No real big, beautiful Elliott wave patterns or anything have formed. It's just been a hard market to trade. And if you're just surviving and making a little money the last couple of weeks, then you're doing great because the markets have been really hard to trade. If you're down, don't feel so bad. A lot of people are down right now because the markets haven't really been doing a whole lot. Look at cousin Russell down there in the bottom left corner. He's really starting to show some nice downtrend. I want to go out and look at the daily chart. Let's go down to the daily chart. S&P, let's see, indexes daily. Here we go. So this is our daily portfolio, and you can see the market's just dropping out the bottom of this on the daily chart. Very bearish. Everything's looking bearish. This is what we were anticipating. Remember, we've looked at this before. If you're here for the first time, you can come in. You can see these markets have been coming down on the daily chart and making a bearish trend. Let's bring the S&P up full screen, and you can see that this is what we were looking at. This market made this nice, big, beautiful run, made a couple of nice big drives up in here. This is where it's good, easy trading. This is when it's, hey, I don't want to ever say trading is easy because it's not, but it's sure a whole heck of a lot easier when the market's doing this. All right. When the daily charts are doing this and we got some nice flat bars, this is when the markets are really good to trade. Now, the last couple of days, you can see we've had some small down bars, but we're getting a big down bar today here in the S&P 500. This thing's dropping like a rock. But during these big trends like that, that's when it's a lot easier to make money in these markets. It's when you start getting these lots of topping tails and bottoming tails and neutral bars. That's not so good. This, of course, is going to rip your wheels off trying to stay alive during that time frame there. So that's kind of what we're looking at. right now, and we're kind of been in very much a neutral state of market lately. So this has been where we've been watching this market on the daily chart. You can see it's just been going into a wedge or a triangle formation. Finally starting to get some downtrend in here. We're coming down and bouncing off some support. You can see right here, we got some support down in here. So we got this area of support we're coming down to now. So we'll watch for the market to come down, get a little bouncy down in here, probably as it tests these areas of support and sees if it wants to continue to break lower. This is our first drive to the downside. So this is called the drive one right here. Drive one, that's our counter trend. And then this is drive two coming down in here. Oftentimes we'll get an ABC retracement off of an Elliott wave to the upside. So if we get three drives, if we go back far enough, we probably have a third drive back here. We do. So there's drive one, there's drive two, there's drive three. So that's the three drive pattern. There's our counter trends right in here. Counter trends are really hard to trade on the daily chart, so you've got to watch for the drives, not the counter trends. They're really neutral in there. You can see they're really hard to trade. And then we get a nice rally, and those are really easy to trade. And then we get the little pullbacks and little counter trends in here, a little bit more difficult to trade. And then we get the rally again, a little bit easier to trade. So that's what we're looking for here. That's the three drive pattern. That's an Elliott wave. Drive one, drive two, drive three. This is the A drive, the B drive, and the C drive. And then we come back, and then we're going to generally get an ABC top formation, and that's what we're coming in here with now. This is almost like straight out of the book, right straight out of the manual with our ABC pattern coming in here. And if you're following along and you're part of the Trade Mentors Club, I've been sending out videos on analyzing these markets for the stock market side, where we've been investing in the stocks, and we've been calling these out as these markets come down through the ABC pattern to the reversal. If we were able to get this thing down to a full Elliott wave pattern, we'd expect it to come down to 100%, or even maybe to the golden ratio of 130.9. That would give us a Fibonacci run off the entire drive from top to bottom. If we come in here, that's a big move. We come in and we pull that in, and that would bring that in there, and this is where we can expect or anticipate this market coming back down to into the Fibonacci sweet spot of that entire market. Now, oftentimes the indexes, if we have a strong market, they won't come all the way back down into the full sweet spot. They'll bounce off of 38.2, start to rally once again. But we've got such a weak economy right now here in the U.S. with all of the shenanigans of the government spending so much money and printing so much money, and inflation going through the roof, and price of energy causing the price of everything to go straight up astronomically. That's why we're getting all this big blow off right here, and we're anticipating this market coming back down into this region. It should start to hold steady once it gets down into this Fibonacci sweet spot. We'll probably see the market just kind of trend sideways for a little while once we get down in here. But then we would anticipate a continuation of a rally, and some of these big firms starting to think this is a good place to start buy some shares. And again, remember, the stock market is just one great big elephant, and all we're doing is we're just a hare's gnat on a mouse's rear, on a fly's rear end is all we are, and all we can do is just ride it around. So we land on the rear end, the hind end of the elephant, and all we can do is ride like a fly. So we need to wait and see, find out what these great big huge institutions are going to do, and they should start buying again right up in here. If you're familiar with the accumulation distribution model, the Heikin-Ashi and the chalk and money flow strategy, then you're going to be familiar with Elliott wave. If you're not, you can pick that up and learn all about it in my book. My book, of course, is on Amazon. Just go search my name, Lan H. Turner. This book will pop up. It's 280 pages. It teaches you all this stuff that we're talking about technical analysis and how they all work together, whether you're doing it on a daily chart, whether you're doing it in the stock market, how to invest, how to buy, when to buy. And then, of course, we take this and we move it all into the daily chart or down into the 1 minute chart, and we start day trading with the same concept and the same information. So if you want a little bit of a guide, you can go pick that up. And it's a paper printed version. If you go sign up for Pit News Magazine, just to give you an idea, if you sign up for Pit News Magazine, when you sign up for it for $1, it offers you a course, a trading course, a video trading course. And if you take that video trading course from Pit News Magazine, the digital version of this book of the playbook is included in that course, the digital version. And if you want the printed version, you have to go get it on Amazon. But if you want the digital version, when you sign up for Pit News Magazine, take that $99 course and it'll give you that book as part of the course because that's the manual to the course. So that's just a little heads up for those of you who are interested in picking up Pit News Magazine. And let's get back to our daily chart. Let's get back to our, let's put these all back to where they belong, and then we'll get back to our minute charts. See if there's not an opportunity for us to put some trades on. Oh, look at this. See that seeing this bounced off that area of support. I told you it was coming down there, and it's dangerous to get short right there. And sure enough, it turned around, started to rally right back up again. So the NASDAQ's still dropping. It's coming down and hitting those areas of support. So what do you think the NASDAQ's going to do? The NASDAQ's probably going to do the same thing, right? It's going to probably come down, hit these areas of support, and it's going to do the same thing that the Dow did. It's probably going to turn around and start to rally and pull back up. It's going to probably do just that same pattern. So this is the pattern in the NASDAQ. We're going to expect the same thing out of the NASDAQ. We're going to expect it to turn around, come back up, and follow the Dow. That's what the Dow did. Why wouldn't the NASDAQ do it? Well, the problem is that we still got some divergence between all of these. If you come over here and take a look, we got that little shelf coming in here, which is really super ugly. Look at all the topping tails and bottoming tails. We don't want to have anything to do with a market that looks like that. That's a terrible market to trade. But this one here, we might want to take a position on this one. We'll come in, we'll take a small position just to see if we can get a starter coming in. Look for a reversal on this NASDAQ. I want to see the NASDAQ follow the Dow and start to rally. That would be a great opportunity for us to get a long position off of here. If it'll bounce off that area of support, turn around, give us a higher high. We got 35 seconds left in this bar. See if it holds. We might be getting in a little bit early. It might not just turn right around and V recovery. It might go and bounce around a little bit. So this would be a complete anticipating a V recovery, which less likely. They're not very likely. Don't get V recoveries very often. Got kind of a V recovery here on the Dow though. So now problem is the Dow's starting to fall again. It's starting to follow the NASDAQ down. So the NASDAQ's hitting the area of support. Going to bounce again. Let's see if it bounces or if it breaks it and closes below that green line. If the NASDAQ, look at the Dow's starting to fall. If the NASDAQ breaks that green line and holds below it, it's 42 seconds. If it closes below that green line, we might change our mind of going long right here and wait for a confirmation of the long. Yeah, it's going down there. It's doing a nice job. It's pulling the NASDAQ back down. So it's pulling the Dow back down. The S&P's dropping out the bottom. Everything on the daily chart was bearish, right? We saw that big bearish market. Now, one of the things was yesterday we had the Fed chair gave a lot of negative news. He's not a very positive guy. He made the stupidest comment. I couldn't believe one of the things he said. Look at this beautiful little shelf coming in here on the Russell. And it's starting to drop once again. We could have taken that little short position there on the Russell, but we were off looking at the daily chart when that came in. Now this is actually bullish. This is a bullish buy signal coming in here. It's, oh my goodness. Should we put one on that red bar right there? There we go. Take a long position on the Dow. And then we're going to kill this one down here. I'm not sure what to expect on this one. Now, this might not be a strong rebound, but it wants to go long right here. We'll see. Everything else is down. The Dow is the only one that wants to look like it wants to rally. This is a rally, a pullback. This is a flag. Now we just want to see it bounce out the top of this thing. It might be a reversal. I mean, it might be a complete reversal where this thing goes, fails on us and wants to go down. The worst thing it could do is just start going sideways. But it's starting to go up a little bit. So we've caught that long position so far. Let's see if it continues through. If it fails, goes up and hits that VWAP and bounces and falls, we could take a reversal on that and just ride it short. Let's see what happens. We want to go up a little bit. We want to get that. We don't want it to immediately fail on us like it's doing. We got 39 seconds left in this bar. We want it to stay bullish at least for 39 seconds so we can get our stop moved up in there a little bit closer. That's ugly already. Look at that. It's failing on us. It's showing too much weakness. Come on. My goodness. These markets. I think there's no reason to sit and wait. It's going to fail. We'll just cut that one. Took a little loss, a little haircut, 60 bucks off of that one. It didn't go for us. That was a little triangle wedge formation, and we could have reversed, but the problem is it just immediately went up, broke those highs, looked like it was going to go back up, break out the top of that triangle formation, and flushed back down. So I didn't even want to take the short position off of that thing. It was too big of a gap, and we had been down 120 bucks already. So I just took it off at 60. Didn't reverse it. Might be sad because it might just drop like a rock now. I wish we would have reversed it, but it didn't give us time to even move our stop order even one bar in. It just, as soon as it went up, it flashed and faked us out just like a good running back in football and went the other way. Now it wants to drop, and it looks like the NASDAQ wants to rally. The NASDAQ wants to pull. We're getting a flag on the NASDAQ. We don't know. The flag is to the short side. Oh, and I missed it. See if it pulls back. Nope, I missed the flag. We could just pop it in there. Let's try it. We're going to try the flag on the short side to the NASDAQ and see if it won't push down one more time. That means it would probably pull the Dow down. The S&P's going down. The Russell's going down. Watch, now that we're short, everything will go down except for the one we're in. It'll turn and go up. So our first goal is the $500 mark. Oh, and look at that dumb thing. It's going to stop us out. So that flag failed. So now we've had two flag failures in a row. And we went in heavy with that was $500 risk on that one. So now we're down 500 bucks. Two flag failures. How about that? Let's see if we can't come in, and if that thing drops below that break right there, we'll go short on the Dow. Look, and now it's starting to rally hard. We were going to go take that long position, but then it's flagged to the short side. Now the NASDAQ is starting to rally, and we're short the Dow. Put our stop in on the Dow. Problem is that NASDAQ is so big. If we start trading the smaller markets, it takes a whole lot more to recover our loss. We'll wait until we get a good signal on the NASDAQ again and see if we can't recover. Now you have to play recovery. So that market didn't want to continue higher. I thought we might get a little ABC out the top. That's what you anticipate, right? We're going to look for a market, but these markets just aren't strong. I thought we'd get a little ABC and see that thing push up and try and break these previous highs and go back up and break the high. It was a nice rally, and it's failing on us completely. So, oh my goodness sakes, we're getting caught in the whipsaw. Now the question is this going to be a reversal on the Russell? Or is it going to be just another flag to the downside and give us a little shelf in here? Oh my goodness. Oh my goodness. Quick, get out of that one. That was painful. We're down $1,000 right now. We need to cool off here a little bit, Lan. You're going too fast. Look, we got a little flag, but it's so ugly on that NASDAQ. Let's come over and take a look and see. We'll calm down here a little bit and wait for a second, see what's going on. We're going too crazy. I accidentally got in with 3 contracts when I meant to only go in with 1, and that really put me behind. Hey, John, good to see you. Glad you're there. Is the VWAP only for day trading or also position? No, it's just for day trading. It's just for day trading. You don't see the VWAP on a daily chart. So I'm pretty sad about our situation right now. We need to catch a trend. Look at all the topping tails and bottoming tails. We just need to hold our horses here for a minute. It might take me a bit to recover this one. This is the most I've been down in 2 weeks, 3 weeks. This is not a good way to end our 3 weeks. We started out a couple weeks ago with a $25,000 account. We got up over 30,000, and now I brought it back down to under 30,000 again. Let's wait and see what's going to happen. Look at that. Russell's not being, it's bouncing off of that 1800 number right there. So let's see if it's going to turn and rally and break above the yellow dots. See if we don't get a bullish signal on here. The NASDAQ's starting to fall. So we got caught in that whipsaw right there. It wanted to go long, and then it turned and started to go short again. And it wasn't strong enough for me to take that. It didn't, the bottoming tails were too ugly. It wasn't a real shelf. It was a flat little bottom right there to the downside. We thought maybe we were going to get a recovery in here, a rebound, because the NASDAQ went straight up, or the Dow. We thought the NASDAQ might follow, and it's not. We want these things to be doing the dolphin thing. We want them to be going in the same directions, and they're all over the place. They're not got any convergence at all. Let's not get FOMO. Let's not get anxious and just jump in on the first thing that comes along. Let's wait for our setups and wait for our signals. Here's our best move. So let's wait. I'll show you. This is what we're looking for. Let's come to here. So here's what we're looking for. We're looking for these little ABC patterns. We want the market to, now we're getting a longer one here. Now let me come through and show you. We got one in here, right here. So this is another one. So see this one right here? I call it the drift pattern. The drift. That's what it looks like we're getting right here on the Dow. We're getting the drift, where it's just kind of drifting down, and then we would anticipate a rally here. Now it's trying to go. It's trying to give us the drift pattern, the ABC to the longer side. Problem is you get caught in that drift, and you take the first 2 or 3 breaks thinking it's going to break out of the triangle. It doesn't. It comes down, it drifts lower. So that's what we're looking for over here. So this is the drift pattern up here on the Dow. So the Dow's got this drift pattern going along, and it's trying to break long, but now it's down. Now it wants to break lower. So that might be a false drift pattern, and a break of that would indicate that we're going to take this thing down once again, another leg down. Problem is that we've got the NASDAQ looks like it's bottoming out here. It got 4 down bars, Heikin-Ashi bars, but they got 2 topping tails in there. We only got 1 bar that didn't have a topping tail. That shows a lot of weakness to the downside, and it wants to start to rally here. So it's starting to break higher. We need a good, strong rally. We need something we can really put our teeth into. So here we go on the NASDAQ. Maybe we're going to get some. The problem is, look at the NASDAQ is going this way, and the Dow is going this way. That's not good. It gives us no confidence to take a long position in the Dow when the Dow, or in the NASDAQ long when the Dow is falling. And I should have been paying closer attention to that earlier, because I kept saying they're going in all different directions. We want them to porpoise, and they're not. They're going all like this, and I took big, long, heavy positions anyway, and I feel bad about my bad mistake. So now the Dow's falling, NASDAQ's rallying. The cousin Russell's over here just going sideways. We're already into this market 30 minutes, so we should start to get some convergence and some trending happening here. That Dow, the drift, failed on us. So the drift pattern, where it should have gone up off of there, has failed. So now we're getting an ABC to the downside. So let's go and redraw. We'll take off all of our drawing tools here. Now we're getting a downside ABC pattern. A, B, C, and we're getting a downside push to the downside. Okay, now the S&P is starting to recover along with the Dow. Along with the NASDAQ. Oh, look at that nice push. Okay, we're getting some excitement to the upside. Maybe that'll pull the Dow up. We're getting some excitement to the upside on the Russell. Now all we need is a pullback, a little pullback so we can get in. We want to get long. We want to get long the NASDAQ on this recovery and see it go all the way back up to the VWAP. But we don't want to go straight up there, all flat bottom bars, and just take off and go to the moon. We got to get a little pullback, a little bit of an opportunity to get in there. 49 seconds. We want to see a lower high in there. Okay, we're getting that over here on the S&P. We're bullish because we got the yellow bars, or the yellow arrows. Let's be cautious here. Let's not get too anxious. Of course, cautious, we may miss it too, because it may just go. Take off and go without us. We need it to give us that little, we need a flag. We need a flag. We need one of these. All right, that's what we need. We need that little flag right there. Okay, that might be it. It might be coming in right now. Needs to stay lower. We need a lower high. Just a little pullback in there. Come on, buddy. Give us a flag. 33 seconds. If it goes up and breaks a new high, we can't get in. We need to get in on a pullback, not on a rally. That was a nice volume bar right there that came in. That's the highest volume bar we've had since that big down bar back there. So some excitement for the long side. We just need an opportunity to get in. 12 seconds. Get ready here. 7, 6, 5, 4, 3, 2, 1. Okay, drop your order. Okay, we're going to go long. See if we can get long. It would be nice if it pulled back a little bit more and didn't go long on this bar. That would be okay. But if it goes right now, it better go hard and fast. It better just take off and go. Or we better get a little bit of a better pullback. But don't break that high and then pull back. That would be not a good thing. Okay, so we're long 2 at this point. We need this thing to continue to go higher now. Be patient, Land. Be patient. It needs to go immediately in our favor. We don't want it to pull back at this point. That would be a bad thing. Okay, there we go. We're breaking higher. Dow's going higher. S&P's going higher. Russell's going higher. We got our dolphins are going. Come on, dolphin. Let's keep it going. We just need to keep it going. Keep it going. There we go. Push it up there. Push it up there, boys. Boys and girls. Okay, we want to see this thing go all the way up to the blue line, all the way up to the VWAP. we could get our stop to break even, we could add in, we could do a little bit of castling, take some profits along the way. Looks like it's dying on us. Oh my goodness, you're kidding me. You're kidding me. It died on us. Oh my goodness. What a lazy market. Now let's see what it's going to do. Just took us out for another small loss. Just broke $1,000 loss. At this point, I should stop trading and come back at 9 o'clock. Let's wait and see if it wants to flag one more time. It better give us a better flag this time. It better give us a 2 red bar flag. And it better stay above the yellow dots. I still think it's going to go up to the VWAP. Show you another little trick in here. I show you some why we're looking. We're going to look at the quarterlies, calls. These are what we call option pivot points. Market likes to go up and bounce off of these pivot points, these option pivot points. There's one right there. There's one right there, right there, right there, another one up there. So these are option pivot points. These are strike prices from options, and the market likes to move to these strike prices because those are very important numbers to the market. Look at the failure. It looks like it's going to fail. So we got a strike price right there. It might come down, touch that strike price, start to rally once again. Now, an advanced strategy, if we weren't down right now, would be to buy right now. You could buy right now as it hits those yellow bars in anticipation of that being the low, where it'll then turn and start to rally once again and give us an ABC pattern, right? So we get an ABC pattern to the upside. 1, 2, 3. So if that's what you think, it's at the 50% retracement of that last move, you could buy right there. The problem is with that strategy is boom, 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 right? It keeps going down, and then you're upside down even more. So you can't do that when you're already down in your recovery mode, trying to make a recovery. Now, if it closes below the red dot or the yellow dots, we'll be in trouble. We'll be back in a downtrend again. Yep, there we go. Now we're back in a downtrend again. But I still think we're going to go back up and touch that VWAP. Still bullish on this market. The other market, look at the Dow. That's the one we should have traded. The Dow's going to the moon. The S&P's up here breaking and giving us the signal that we're looking for. Look at that. There's a perfect buy signal on the S&P right there. We could put one on the S&P if we wanted. But I'm still down here interested in the NASDAQ. I want to see the NASDAQ break higher. Okay, that was a false break to the upside on the S&P. That one just stabbed everybody, got all the stops, got excited to go long, and then it failed again. Cousin Russell's down there looking like he's trying to do the same thing. Dow, Jiminy Christmas. Look at the Dow go. Okay, here we go. Oh, on the wrong chart. Let's see if we can't get a long position going here on the NASDAQ again. Everything else is breaking to the upside. Let's see if the NASDAQ will too. Why is the NASDAQ being so lazy? Look at the Dow go. Look at the Russell go. There we go. Okay, we're long with the NASDAQ. Okay, we got our ABC pattern going. So this is what we're looking for. A, B, C. And we want to just see that thing go and climb all the way up to the blue light, or all the way up to the VWAP. Don't fail on me. There you go. Push, guys. Come on. I haven't seen so many weak markets in so long. This is just crazy. Come on. Give us a little bit of follow through on at least one trend. Can we get a trend in here? One trend. Come on, guys. Not that hard. Just one trend's all we ask. Come on. Push it up there. Push it up there. Look, Dow can do it. Look, Russell's doing it. Look, S&P can do it. What's wrong with you guys over here in the NASDAQ? Don't you dare fail on me again. You cheap little rotten market. Oh my gosh. Come on, push it up there. Push it up there. Give me one big long bar, a couple big nice long bars. Can't you do something? Can't you guys do something over here in the NASDAQ, you bunch of lazy bums? Look at the Dow showing up. Look at how the Dow does it. Dow knows how to go long. Why are we not long the Dow? Why are we down here playing with you guys in the NASDAQ? You're a bunch of wimps today. Wimpy market in the NASDAQ. Come on, push up. Give us a nice big long bar. One. One big long bar. Maybe two. Come on. Push it up there. Push it up there. Get some volume in here. All we can do is cheerlead at this point. Come on, cheerlead. Go, go. Come on, NASDAQ. You're the wimpiest of them all. You're the loser of all these guys. You can do better. You can do better. Come on, push it up there. Test that high. Break it. There we go. Look, we got all our money back. So that was our $1,000 down. Now we're back up to break even. Now we can start to trade again. But those are some nice moves over there on the S&P. Look at that. That was a perfect setup, and away that thing went. Even Cousin Russell down here made a beautiful ABC pattern. Okay, can't complain too much about the NASDAQ, although it took it a little bit to get strong enough and have enough strength to go up there. Let's see if it can break above that horizontal B line. We're watching all four markets right now. Let me show you in the software. We can come up here to the charts tab, and I've got portfolios designed in here set up. So you can create a new portfolio. So we can come in and I can look just at the, like, for example, I can come down to the mini Dow and we can look at the mini Dow. So this is the mini Dow, and we're looking at the 4 different time frames. I got the 1 minute chart up in here. I got the 2 minute on the left hand side. Down here in the bottom left hand side, I got the daily chart, and underneath that I got a range 50. And the reason I'm watching range 50 on here is because this is the one David Duty likes. He likes the range 50, and that's what the article is going to be all about in Pit News Magazine. Is he's very excited about range 50, and so he trades the range 50 bar, and that's what we're watching down here. So he likes to trade the one same ATR as me. He does the 1 and 1, but he does it on a range 50. So, and then he runs the 50 period moving average over the top of it. And if it's below the 50 period moving average, he only takes short positions. If it's above the 50 period moving average, he only takes long positions. Again, the problem with that is 50 period moving average is a little bit lazy. So you miss the reversals. So you have to keep that in mind. He's only looking for continuation formations and continuation patterns. But that's the range 50. You can go down. I'm oftentimes you'll go if you get the free course over on Trade Mentors go to Trade Mentors, there's a free course called the Heisenberg strategy. And the Heisenberg strategy, we trade the range 6 chart. Now you need to have a market that's moving quite nice, but the range 6 chart is a good one to trade too for day trading. I like to trade the range 6. David likes the range 50. Now, a range bar chart has no time involved. It's just the momentum of the market. So you have to have the momentum of the market to create a bar. So if in a range 50, each 50 ticks of the bar, each 50 ticks of the market will create a new bar. So the market has to move 50 ticks before it will create a new bar. And that could take 10 minutes, it could take an hour, it could take a second. But so the time is irrelevant. It's just the movement, the momentum of the bars. That's why range bars are really quite cool price bars. You might have fun with those, go in and play with them. I'll show you how you can get to the range bars and change them. Let's bring this full screen. You bring your chart full screen, you come down here, and in the bottom left-hand side of Track and Trade, you get all the tabs, your different tabs for different time frames. If you right-click on one of those tabs, it brings up this little window, and then you've got all of these controls where you can go in and change all of your charts. Make them whatever time frames you want. So it's the tabs down in the bottom left-hand corner. You just right-click on it, gives you this right-click menu. So you have to bring it full screen, though. Right-click on a tab, gives you full screen. That's how you change all the time frames. Now over here in the window, to open a chart, you just right click on the header and it'll give you another right click menu. In Track and Trade, we use the right click menu all the time, everywhere. So just to discover things that's in Track and Trade, just right click on them. Look, the Dow's just going through the moon, through to the roof. Look at that. That would have been a beautiful trade. We could have traded that thing and done I've been complaining that we haven't had the opportunity to get into a market that would have given us the opportunity to trade the pyramiding and pillaring and castling. That one we could have done it. That's finally a market that's moving big enough we could have pillared, pyramided, and castled had we been trading the Dow instead of the NASDAQ. So let's go back over and look at the 1 minute charts. See what the NASDAQ's doing. So good thing we got out of the NASDAQ, starting to fail. Lousy NASDAQ. But it did go up. Look, it went right up and tried to touch that blue line. I said it was going to go up and touch that blue line. It just almost touched it right there. Came real close. But we took our profits off, covered our losses, feel good about ourselves getting back to green. Now we can trade the top of the hour. We'll watch. We'll sit here and watch this for a few more minutes. But at 9 o'clock, we'll be top of the hour, and we'll start looking for another big trend to happen at 9 o'clock. And then again, we'll do it again at 10 o'clock and watch for another big trend. But right now, we're going to kind of sit on our haunches and wait and see. We might get an opportunity. We could take a short position off the Dow as it's dropping and going to reflect. Probably remember that blue line is like a big rubber band, so it'll probably pull that price down to the blue line again as it sweeps across that blue line. Now what we'd like to see it do is go up and stay above the blue line and create another nice big long rally. Okay, so it sweep down, take out all the lows, and it's starting to go back long again. Let's see it pull back and give us another big long ABC to the upside. That's what we would like to see. A, B, we see it pull back a little bit, maybe bounce off that VWAP or stay above it and start to rally once again. Because if you go out and look at the daily chart, look at how big of a drop we've had. So that's a big drop. It's coming down here, testing these areas of support. Right here we got the spider web going on the Dow. So the spider web is testing that area of support. Now it's bouncing, it's backing off. Okay, it came down, it touched it. Now it's backing off. So come down, touch that on the Dow. Now it's backing back off. Come back to we'll come back over here to the 1 minute chart. See how far this thing comes down. We might want to catch the next ride up. That was a really nice move on the S&P too. We caught it over here on the NASDAQ. We can't feel so bad about ourselves. We made had a couple of bad reversals on us in the beginning, and so we had to recover, and we recovered, and so we're back to green again. Now we just need to wait until we get another opportunity, and we'll start working on making money again. So we got the down arrow. I would like to see it come and flip and go back up now. How far down is it going to come? How far down's the Dow going to go? Cousin Russell's down there. He's following. We finally got them all moving in sync. Finally got them all moving in sync. They're kind of moving like dolphins, and that's what we want. We want them to be moving like dolphins. Yeah, it's coming back too far. I don't know. We'll wait. This is the pattern we're looking for right here. Let's bring that back up again. We're going to flip through some of these. Maybe that little drift pattern. It's not. It's definitely not the ABC pattern. Maybe we'll get the. How far back? Oh man, it's really coming back. It didn't flag to the downside. Hasn't flagged yet to the downside. It could just be a little ABC top formation in here, or a little 1, 2, 3. A head and shoulders is what I'm trying to say. So this could be a continuation of the downtrend. So if we come in here, this would be a little left shoulder, neckline. We got the head in here. We get the neckline, and then we get a right shoulder. Problem with that is that could fake us out to the long side thinking that we're going to go long, right? So if we go long off of this thing, A, B, C, and then we go long, that's what we were looking for. That's what I want to see the market do. I want to see it bounce off of this blue light down here, this VWAP, and start to rally and go one more leg up. So that would be leg 1, leg 2, leg 3. So we see this would be drive 1, this would be drive 2, and then this would be drive 3. But the head and shoulders formation, the problem with that is we get a little rebound. It come up to 61.8 or 50, a little bounce up, test that previous high, reject that high, and then turn and cascade back down. Or we might just get a complete failure and this thing come all the way down. That's what it's looking like. Okay, we're coming down. We're testing the VWAP on the Dow. Let's watch the Dow. We want to see it rebound now and start to rally back up and give us that projection up that next drive. So if we could get a reflection of that drive, that would be nice. A, B, C, D, right? So we want to try and capture that. So there's two ways we can do that. We can come in here, anticipate the bounce off the blue, get a higher high. We need a higher high. It's making lower highs right now, so we need it to turn around. So we could go in very cautiously with one, and we could just trail one price bar back until we get a new higher high. Now we've got the reversal on the NASDAQ already, but the reversal is failing. So that's flagging to on the NASDAQ is flagging to the downside. That's bearish on the NASDAQ. The NASDAQ is bearish. See that little flag, a little shelf formation, how it's coming in there, making that little shelf. Oh, you guys, I'm sitting here doing the same thing again as I did yesterday where I didn't switch it back to the charts. Okay, so what we're looking at is this market's coming down. I've drawn all the little ABCs, and you guys missed all that because I was stuck on that other comment. Please define VWAP. Wilsnet. The VWAP is a volume-weighted average price. So it's the average of the market. So it's just a moving average, but it takes volume into consideration. So it kind of wanders through the day, and it's a little bit more active in the morning, but because it adds up all the volume as it goes throughout the day, it starts to flatten out. And it's only good on an intraday chart. It's not good on a daily chart. We don't use VWAP out on the daily chart, but it acts like a rubber band. And a lot of people pay a lot of attention to the VWAP. See down here on the Russell, the market went right up to the VWAP, touched it, and turned around and started to fall once again. I'm going to kill this because I'm distracted. Let's take my order off. This is still coming down as looks like it wants to bounce off of these VWAP. I want to see it bounce and turn and go back up. I don't want to see a full. We can use a Fibonacci retracement. That Fibonacci is currently at 43%. It's now trading, that's right at 51%. So it's made a full 51% retracement. If we take our Fibonacci ruler in there and we bring that all the way back up to the top, we're right at 50%. So a lot of guys, and I've done this on a number of occasions and been very successful at it, hit their buy right now. So they start accumulating positions. We'll want pick up a, a position at 50%. If it comes down, we'll pick up another one at 61%, pick up another one at 78%. And then if it drops below 78%, we take our loss and get out. But right in here in this region, this is where we usually turn around and start to rally. But I'm not going to do that right now because that's a dangerous strategy, because it could just continue to fall and then you have to take another big loss and then recover again. So what we're going to do is we're going to wait for it to turn. We want it to actually bounce in here, turn, and go. So we got 61.8 sitting right there. Maybe it's going to come down to 61.8. It might even go down further. We have to just wait and see. Let's see, send it back. We're going to draw this down at each new bar down. Okay, that's looking like we want to go long right here. So we can go long on a break above the first bar. And then I got another one right here, this QOCO. If I open that up and show you, it's designed to go on along above the ATR. So then we can drag the ATR into this game here, and we'll pop that onto the ATR as well. So we have two entries. Okay, we're long on the rebound. We're looking for this thing to bounce off of the Fibonacci sweet spot and start to rally once again. So we got one. If it continues higher, we'll add a second one when it crosses over the boundary of the yellow dots. So I'm going to clean up all this mess so we can see a little bit better. Get rid of all these drawings. Get rid of this one in here. We can put it back in later. This is what we're looking for. Oh, and it's failing on us already. So I'm just going to stop out if it breaks a new low. I'm not going to keep adding in. That's called catching a falling knife. Oh my goodness. So we got a break, told us we wanted to go long, and then it faked us out. Went back down, stopped everybody out, just like it just did to us. Gave us that clearing bar. So now we're going to start going long again. Put another OCO in there. We're going to add in to another long position if we can break above the yellow dots. So we got an ugly little clearing bar. It's not a very good clearing bar because the body was too big, but it did clear above and it cleared below. So it took out the stops above, which is us. We got caught in that. We entered and then it come down and stopped us out. Now we want it to be, we want to see some strength come in here. We want to see it go. If we get stopped out again, we're going to have to wait for it to prove that it wants to be bullish. We're not going to try and catch the reversal. I usually don't try and catch reversals. I usually want to wait for it to prove that it wants to be bullish, prove that it wants to go up. Give me 4 bars, green bars, and then catch the reflection and try and get the next rally up. Because oftentimes the market will come down. Instead of turning and starting to rally, it'll just go sideways and pop you in and out, pop you in and out, pop you in and out, and take away all your money. So I like to wait for it to go and prove that it wants to rally. But we're going to try the reversal this time just because we had such a strong reflection. This market making such a beautiful uptrend and such a beautiful downtrend. I'm going to try and catch the reversal and see if this won't continue. And if we get stopped out, I'm going to call it a day, and we'll come back at 9 o'clock and 10 o'clock and see if we can't catch a trend at those top of the hours. Top of the hour is always a good time to catch a new trend. We're at the bottom of the hour right now. And so at the bottom of the hour is where the market usually starts to drift sideways. And then we start getting new trends at the top of the hour. So where it's made a beautiful uptrend, beautiful downtrend, we may now just get drift sideways. And that's exactly what the NASDAQ's doing. The NASDAQ is not recovering like we want it to. We're at the bottom of the hour. We may not get a trend out of this. There it goes. Okay, we're going to add a second one as it crosses the yellow dots. Okay, we're in with 2. We have a stop set for quantity 1. If we wanted to just recover our loss at this point, we could just get out and take the recovery on the loss. But I want to go long, see if this is not going to recover for us and start to rally. Break this yellow light with quantity 2 and see if we can't get up there and make a little bit of money. So I'm going to kill this since we're long with 2. Come in, right click on it, add OCO, drop that in there, edit that trail, and I'm going to just have it trail price bars back, and I'm going to go 1.1, 1 price bar and 1 minimum move. And we're just going to trail up until we get to break even. Now I need to set that. I can set that in here. Let's come back and we're going to go trail until break even. And it's just going to trail up there until it gets to break even. And once it gets to break even, it's going to stop trailing, and then we can move it over. And hopefully at that point, it's above the yellow dots, and the yellow dots will flip to the other side, and then we'll start trailing the yellow dots rather than 1 price bar back. Because the market's not usually that beautiful, as the Dow is just, oh my goodness, those are the most gorgeous trends. That's what's so beautiful about the Heikin-Ashi bars, is when you get into a nice trend, look at how beautiful the bottoms are. And you can just trail 1 price bar back all the way to reversal. Trail 1 price bar back all the way to reversal. We don't usually get them that pretty. Usually they're more like what we see on the Russell. So that's why you can start trailing on the yellow dots, which will kind of smooth those out a little bit. Now the problem is we generally get like 4 rally bars and then we'll get a flag. And if we get the 4 rally bars and a flag, the flag is usually the reason you get a flag is the flag is stopping everybody out. It takes out all your stops. And so we'll get 4 bars. We'll bring our stop to break even, and then it'll flag, come down and stop everybody out, and then it'll start to go again. You ever got caught in one of those where you're like, oh, I just got it to break even, and it comes down and stops you out and then takes off without you? That's actually where I usually want to get into the market. I don't usually get in on the first reversal. It's pretty rare for me to take the first reversal because I wait for the flag, stop everybody out, and then get in after it stopped everybody out. And that's exactly what it's going to do right here. Watch this. Come on, don't fall apart on us now. The Nasdaq's pushing higher. It's doing. Of course, we switched from trading the Nasdaq up to the Dow because the Dow's doing so beautifully. It's showing too much weakness. I don't trust it. I think it's going to flag. I didn't want to take a loss. Oh, we took a loss anyway. Brought us back down to 0. Look at that, 0, 0, 0, 0, right to the penny. Okay, it's flagging. See that? The problem with a flag like this is that it's also a shelf. It could also be just a pullback retracement, and you get that little shelf in there, and then down it goes. So then it becomes an ABC to the downside, right? So anytime you get into this kind of a situation, I call them decision points. That's why we call it decision point trading. Okay, so decision point trading means that it could go either way. This could be a rally, A, B, C, and then a continuation of the uptrend, which is what I think it's going to do. I think it wants to be bullish. Look at the Nasdaq's pulling that thing up. Or it could be an ABC to the downside. So this is a decision point, and you have to decide which direction do you think it's going to go. If you think it's going to flag, which it just did, and then continue, we can take the continuation. We'll take the continuation. We think it's going to go up because the Nasdaq's going up. We take a quick 50 bucks if it'll give us 50 bucks out of there. And now we're just long 1. Now we've covered our loss, our cost of doing business with our quantity 2. Now if we can just bring this edit, and we'll just bring this in here, trail price bars back until break even. Now let's see if this thing will start to go for us once again. Look at Cousin Russell. He's doing good. He wants to go. S&P, that was a perfect setup and wanted to go. Didn't have the flag, that broke the bottom. See, it was that bottoming tail that took us out, and it's the only market that did it. It just happened to be the one we're in. See that bottoming tail right there? That's the one that stopped us out. We didn't get a bottoming tail in the Nasdaq, didn't get a bottoming tail in the S&P, didn't get a bottoming tail in the Russell, not yet anyway. But yet we got one in the Nasdaq. We got the one in the Dow, the one we're trading. How does that happen? How does that happen? We're getting a little tweezer top here. This thing, that's a bad sign, and all the other markets are failing. So they're all pulling back. Come on, we got 5 seconds to bring that thing in. Now it jumped our stop, but not quite to break even. Okay, that's a flag. See that flag right there? That would be another buy signal. We could buy right there if we wanted to on a break. And that would put us in with a second position on that little flag right there. We had a lower high. So now we're going to take another long position. Michael, just getting into Forex. Come on over and trade in the futures market with us rather than Forex. Forex, you can trade Forex, but Forex is it's not a regulated market. It's over the counter. And you can trade all the foreign currencies over here in the futures market with us. Futures market trades out through an exchange out of Chicago. This is showing weakness. I'm not taking that. We'll dump it right there. Come on over with us and trade in the futures market. Go over to just go over to Track and Trade. Track and Trade has a Forex version of the software, so you can have the same software in Forex as well. And I trade Forex, but I much prefer to trade the futures market because it trades through an exchange. So go over to, let's change this banner. Go over to Track and Trade. And my platform is Track and Trade Live Futures. Get your free 14-day trial at trackandtrade.com. So go over there, get your futures version, and come and trade the indexes with us rather than foreign currency. I think you'll be a lot happier. I don't trade Forex anymore. I used to trade Forex all the time. I don't trade anymore. This is so much better. Futures market is the way to do it. And you can trade all the foreign currency in the futures market if you want to through the same platform. It has all the currencies. Let's go look at some of the currencies. In fact, I think I have some in here. So gold, silver, grains, micro, those are the micro currencies. Where's our mini currencies? I will pull that up anyway. That's what I've got. So there's your Canadian dollar, there's your Australian dollar, your British pound, your Euro FX. And those are going through the through the Chicago Board of Trade Exchange rather than over the counter through some guy over in China or something, or Europe, or wherever you're opening your account with. So just a little heads up. I think you'd be happier. Well, that's the advice I'd give you. So, Michael, I'm getting into Forex. So the advice you can give me is to don't trade it through the foreign exchange over the counter places. Come over and do it through the Chicago Board of Trade. I think you'd be a lot happier trading through an exchange than instead of over the counter. That would be my advice. And if you want to trade Forex, you can do it through the futures market, or you can do it with the Forex version of Track and Trade, but I would recommend you get the futures version. I promise you're going to be a lot happier. And then come and stick with us here, and I'll give you all the advice I can. I'll help you as much as I possibly can. So that's, you can see the Euro FX down there. These are range bars, and we're watching the Euro on the currencies on the range bars right now. So that's the questions. That ought to be good for the questions that we got so far. So yeah, come over and join us. We'll trade foreign currency with you, but we'll do it on the futures exchange. We're not going to do it over the counter. And we're going to trade the same thing. So Michael, you're going to want to be very familiar with the patterns. So this is what you're going to look for. These are the patterns that we trade. Here, I got a little set. There's a lot of waiting and searching for just the right fishing hole. Trading is like fishing. Then throw your line in the water and hope for a bite. Sometimes you catch a small fish, sometimes you catch a huge giant fish, sometimes you lose your bait. It's rare to catch the big fish, more likely to catch a lot of small ones, but a lot of small fish are good eating too. So that's what trading is really all about. It's just kind of looking for the fishing holes. And these are our fishing holes, all these little patterns right here. This is what we're looking for, these little shelves in a trend. A market's got to be trending though before you can make any money. You can't make money on this is what I call my triple sow cow. It's kind of a you ever go to the Olympics and watch them skate, and they do these crazy turns? They call them the triple sow cow. They do the most beautiful moves, and then they call it after a cow. It's not actually sow cow. It's a French word. I'm being silly here, obviously. So this is when you have your long 3 contracts and you trail with multiple locations so that you get a different outcome on your exit. We'll go into that in greater detail as well. But these are the patterns we're looking for. So this is the one that's my favorite right in here. The first one, ABC pattern. These little flat bottoms. But right here, this is my favorite. Let me get rid of this. So Michael, these are my favorite patterns right here. And so these are the ones you're going to want to trade. So if you look at this pattern right here. Look at this one right here, this one on the left-hand side. Now let's go back and look at the Euro FX. That's your Euro FX pattern right there. See that? Started to rally, pulled back, and then when it goes from red to green, that's your next trade. That's your trade, not the first one, because you don't know it's going to go up, right? It's coming down. It's making this ugly downtrend. It does turn and starts to rally. It's the little pullback right there, and then the what we call the reflection. That's what you want to trade. You want to trade. This is your A, B, C, D pattern. So you want to wait for the market to make A, B. You want to see it pull back, and then you want to trade from C to D. And you just ride it until it ends. The trend is your friend until it bends or ends. Here's another one on the Australian dollar. So you got a nice little uptrend, little A, B, C pattern. A, it pulled back. You had this, what I call little shelf in there, and then it takes off and goes one more time. So you trade from here to here. You wait for it to do it first. You don't trade that one. You miss the AB pattern. You get in on the C to D pattern. And see, that one went 100%, went right up to the exact same distance. That's called the reflection. So from A to B should be the same distance from C to D. That's what you're going to anticipate. So that's where your money maker is right there. Okay, so here we go again, the Canadian dollar. We're anticipating a rally up. And the further it goes up, you want it to go nice four nice flat bottom bars at least, and then a little pullback. And then you're going to look for the reflection. You're going to buy on the first candle to make a new high off of the reflection and up and anticipate a rally. So here it did it again. Right here's another one. So it comes down. You go from A, B, pull back. First candle to break a new high right there. See that? First candle to break a new high right there. That's where you get in and you ride it up to and it went right up to the 100% level once again right here. So there you go. So it went right up and hit our target 100%. 100% is the same distance from A to B as it is from C to D. So that was a nice move there. And you can just see it happen over and over again. You just take the first one. You want them to be a little bit smoother. This is a little choppy in here, so you have to be careful on the choppy ones. So you kind of want to watch a market that's not quite so choppy. And if you can catch one of these nice trends, you get in and away you go. Now this is the micro size. So this is the little small markets, but from here to here, that was an $82 move. But if we go to the key, you can see that the margin on it's only 180 bucks. Oh, day margin is only $93. So that was a $100 investment. You put $100 in and you made $80 on that downtrend right there. So you can trade. These are micros. They're tiny. You can also go into the minis, which are larger, so you make more money. But when you're first getting started, you might want to just stick with the minis. They're the micros. But we've got micros over here in the indexes too. I like to trade the indexes a little bit more than the currencies. So if you want to kind of come and trade with me, I like to trade the currency or the indexes, but we could come over and trade these if we got guys interested in it. It's a lot of fun to trade some of these other markets and not be so myopic into the indexes. But let's see, let's come in. I'll show you if we come into the indexes. Mini index, mini micro, micro Dow, micro. Where's my micro indexes? Micro Russell indexes. I thought I had a micro index in here. Index, that's range 50. Where's my micro? Oh, micro indexes is the first one. Okay, these are the micro indexes. So if you guys are just getting started and you're a little bit worried about the size of the money that you're trading, look at the S&P. That's just a nice, beautiful, sweeping trend. But this is so they're 10 times smaller. So you can come in here and look, this distance from here, that's only 40 bucks. And so $40, and if we come into the key, your initial margin, your day margin on that is $75. Figure about 100 bucks on these. So $100, and you can trade as often as you want with $100. So you put in 100 bucks, and in that one, if you'd have gone short on there, that'd have been a $40 profit. That way you can get used to trading without getting your wheels ripped off. Like we were down $1,000 today over in the mini, and that's over here in the Nasdaq, right? In the Nasdaq, if we were trading the micros, that's a $96 move, and we would only have a $100 investment. And there's no pattern day trading rules here in Chicago, just like in the Forex market, there's no pattern day trading rules. You can go long and short as often as you want, and there's no penalty for either direction. But we do the same thing in Chicago. There's no pattern day trading rules, so you don't have to have a $25,000 account. And if you're just going to stick with the micro minis, you just stick with the mini or the micros, these tiny markets, you can open an account with $2,000. They'll let you open an account with $2,000. If you're going to trade the minis like we were trading this morning, you have to have at least $5,000 to open an account. But to trade the minis, you can get started with 2 grand, and there's no pattern day trading rules. You can trade as often as you want, long and short, no penalties. So I like to trade through an exchange. I think you'll be happier, Michael, rather than trading some foreign currency thing. All right. You have any other questions you want to throw at me? Let's come in here and go back over to, let's just go take one more quick look at the markets. Look at the 1 minute. Oh my goodness, it's been beautiful. We took off and started doing other stuff, and man, that market's really been doing pretty. We start 9 o'clock here in a couple minutes. 1, 2. Wow, that Dow is just a beautiful market today. Look at that thing. Just as pretty as could be. Everything's been really beautiful. That's why I like to wait a little bit longer. I get a little pressure to come and trade because we're trading the first, um, the morning bell there, and I get a little bit of pressure to come in and show off a little bit and make some money first thing. And it's that first 30 minutes, first hour of the day is oftentimes really difficult to trade, which is why I don't mind being in here and doing it with you guys I have pressure to perform for you guys in here. I don't sit and watch and wait for the perfect setups as often. Maybe I need to be a little bit more cautious, but then you start trading at a little bit later in the day. Once we get past that craziness, the market starts to trend really nice like this more often. And it's a lot easier to trade after letting all that get behind you, all that wild and crazy early morning market. And then we can just trade the smoother trends. And you want to see them start to porpoise. You want to see them to kind of go together. That's important. When they're all going like this, it's really hard. You get lots of bad signals. Let's go give our lesson. I was going to start that first thing in the morning, but we got started too late. I got a little lesson for you here I want to give you. So let's see if I can pull this up. All right, here we go. Avoid distracted trading. That's just what I was just talking about. I get distracted because I got you guys here watching me, and I'm worrying about making the projection and getting the right screens going and everything. I do a lot of distracted trading. And when I'm teaching, it's hard to just focus on trading too. So doing a lot of teaching, but that's what this class is all about. I'm not complaining. The reason I'm here is to teach. I want to help you guys do the best you can. Um, Steve's asking, do we trade the grains? Yeah, we trade the grains once in a while, but I don't generally day trade the grains. The grains are more of a position trade. You're going to get a position and then you're going to stick with it for 3 or 4 days, a week, a month. The grains move a little slower. You don't necessarily want to day trade them. You can day trade the grains a little bit. Soybean oil moves enough to day trade, but the other markets, they're a little bit too slow. If you wait until a government report comes out, the WASD or something, then you'll get enough action. You can do a little day trading, but for the most part, we just kind of position trade those. So don't trade during negative life events. If you're going through a divorce or you're fighting with your girlfriend or those types of things, that's not good times to trade. You need to take a break. This causes big loss. Take time off, go on vacation, get away from trading for a little while. Sometimes we love it so much that we get so focused on it we can't think of anything else. We're obsessed. I know I am. I love it. I've been obsessed with it for 25, 30 years, 40 years. How old am I? I've been obsessed with trading for 40 years. That's crazy. That's an obsession. That's more of an obsession than I have with my airplane, and I'm pretty obsessed with my airplane. That's an obsession. We need to take time off, get away from it, walk away for a little while. Okay. Go enjoy your vacation. A lot of guys will say, "Oh, I'm going to go trade on my vacation." Why would you do that? That's not a vacation. That's the dream. Oh, I want to be able to take my laptop and trade on vacation. That's not a vacation. Go on vacation. Don't get up in the morning and go flip your laptop open and start trading and have all the stress of trades. You have a loss while you're on vacation because you can't focus and concentrate, and then it ruins your whole day. And you're yelling at your kids, and you're yelling at your wife, and you're yelling at your girlfriend because you lost $1,000 that morning, and now you don't want to go buy a ticket to Disneyland because you just lost $1,000. Now what are you going to do? Don't do that. Don't don't do that. Just go have fun on your vacation. All right. All right, guys. One last push for the magazine. Go get your Pit News magazine. I really appreciate it if you guys would support the magazine. You can listen to it, read it, watch it. It's full multimedia magazine. You can get it for a whole year for $1. So jump in there. And we got David Duty coming up in the October issue. Dr. Scott Brown was in the current issue. Real wonderful article on your retirement. If you're interested in how you should plan for retirement, he's got a real great article in there on that one. And you can listen to the entire article. I've got an article in there that's got a video that you can watch. And then, of course, we got videos and audio and articles coming up in the October issue. So come and see us over there with Pit News Magazine. And I'm going to just let you guys go for now. Call it a day, and we'll see you Monday morning. And only on Trade Mentors. We're not going to be in Track and Trade, and we're not going to be in Commodity Trading School Monday morning, and tomorrow's Friday. I'm taking it off. All right. I'm taking Friday off. I'll trade. I'm just not going to do it live in front of the audience. So I'm not going on vacation. So we'll see you Monday morning, bright and early, 7:30. Take care.